Alright, for this video I want to go over the IRS Form 1099 INT for the 2023 tax year. And in this example we're going to look at an individual taxpayer that has interest income reported in Box 1 and they have interest reported in Box 3 from U.S. Treasury obligations. So in addition to the 1099 we've also got the taxpayer's income tax return. So we've got the 2023 Form 1040. And we'll have a look at where that interest is reported on the 1040. And then because our taxpayer is a resident of Georgia, he's filing a full year resident return, a Georgia Form 500. So we'll have a look at the state return and see how that information is reported as well. So if we go back to the 1099, Box 1 is your regular interest income that's subject to both federal income taxes and it's subject to state income taxes depending on where you're a resident, right? So this amount is going to be taxable at both the federal and the state level. Now, Box 3, interest from U.S. Treasury obligations. This interest income is also generally going to be subject to federal income tax, right? So the federal government is allowed to tax its own obligations. So if you have U.S. Treasury interest, you're going to include that in your federally taxable income as well. What's different about Box 3, depending on where you're a resident, you don't have to pay state income taxes on this interest. And so what we'll see with Adam's Georgia return is we have an adjustment to exclude the Box 3 U.S. Treasury interest because the state cannot tax that income. All right, so if we start with the federal return, so this is Adam's Federal Form 1040. Page 1 here, we can see that we are reporting the total amount of interest from that 1099. So that's the $100 of Box 1 interest and the $450 of U.S. Treasury interest. He's also got it included here on Schedule B, so we reported the total on Schedule B, and that amount flows through to page 1 of the 1040. Now, Schedule B isn't required under every circumstance, so if you have a look at the Schedule B instructions here, we can see at the top they've got some notes here about when you must include the Schedule B. And generally, it's only required if you have $1,500 of taxable interest or dividend income, but it can also be required no matter what amount of interest you have if it falls within one of these categories. So if you have seller finance mortgage interests, right, if you're claiming exclusions from EE or U.S. savings bonds, and so on and so forth. In our example here, Adam's just decided to include a Schedule B anyway, even though he's not required to. All right, so that's the federal side. So at the federal side, we're including all of the interest and income. It's included in his AGI, and it's ultimately subject or included in his taxable income. Now, what about the state tax return? So if we look at his Georgia return, Georgia uses your federal AGI as a starting point, right? So we look at, okay, what's our adjusted gross income for federal tax purposes, and then we have adjustments up or down depending on any federal to state changes that need to be made. Well, in this example, because we have that U.S. Treasury interest, we have to make a reduction to our adjusted gross income for that interest because it cannot be taxed at the federal level, not at the state level. Right, and so we see an adjustment here. We are reducing our taxable income in Georgia by $450, which is the amount of that U.S. Treasury interest. Now, that information is first reported on the Schedule 1 for Georgia. So every state's got different schedules, different presentation. For Georgia, Schedule 1 is where we report any of those adjustments for income based on Georgia law. So we have additions to income up here, and then our subtractions to income are reported down here on line 10. So you can see Georgia has a line 10 item, interest on U.S. obligations, $450. So we're going to have a net adjustment of a $450 reduction to our income in order to get to Georgia adjusted gross income of $95,100. All right, so that's why it's really important to pay close attention to the amounts reported on your INT form and make sure everything is accurately reported at both the federal and the state level. But in this case, Adam's done everything correctly, right? He's got all of these interests is taxable at the federal level, but only the $100 in regular interest income is taxable at both federal and state level. The U.S. Treasury interest is not going to be subject to taxes in Georgia. All right, so that covers it for this tutorial. Hope that was helpful. Any questions, feel free to leave a comment below, and I look forward to seeing you on the next one. Thanks.